Welcome to the Explainer. All right, today we're digging into a real economic head scratcher. Our guide, the morning market report from philstockworld.com. And what it's showing us is, well, it's an economy that seems to be booming and busting at the very same time. I mean, how is that even possible?
Okay, so get this. On one side, you've got the stock market just soaring. The S&P 500 is knocking on the door of a record 7,000 points. But then you look at the other side, and the mood on Main Street, it's completely cratered. We're talking lows we haven't seen since the pandemic. And believe it or not, both of these things are happening right now at the same time.
So you might be asking yourself, how can both of these things possibly be true? How can an economy look so amazing on paper, but feel so, well, troubled on the ground? It really is like it's in two states at once, both alive and dead. So let's play detective here. We're going to investigate the clues and try to figure out what is really going on. All right, clue number one. Let's start with the view from way up high, the stock market. And from this perspective, from 30,000 feet, the story it's telling is one of incredible strength and, frankly, a ton of optimism. And that number, 7,000, that's the headline, right? The S&P 500, which is, a huge benchmark for the entire U.S. stock market, is just about to hit a brand new historic high. If you just look at this one number, you'd think the economy is absolutely on fire. So the crucial thing to understand is this isn't just a bunch of hot air. This rally is being powered by some very real factors. You've got the biggest names in tech, the so-called Magnificent Seven, leading the charge. You've got all this excitement around AI. But even more important is this. Corporate profits are actually genuinely growing. I mean, Q4 earnings are up over 8%. And get this, a staggering 81% of companies are beating their earnings estimates. That's huge. And this quote from philstockworld.com really hits the nail on the head. It shows you the engine behind all those profits. They're saying this isn't just about companies firing people or cutting costs to squeeze out a profit. Nope. They're actually increasing their revenues. Their top-line sales are going up. They're selling more stuff, which is, a classic sign of a healthy business. Okay, so that's the view from above. Now, let's look at our second clue. And this is where the picture changes completely. We're going to look away from the flashing numbers on Wall Street and zoom right in on the feeling on Main Street. And wow, just look at the scale of this collapse. We're talking about consumer confidence plunging by nearly 20% in a single year. This isn't just some minor dip, you guys. A drop like this, it signals a really deep, widespread concern about what the future holds. And this anxiety, it's not coming from nowhere. It's totally rooted in reality. We're seeing huge companies, we're talking Amazon, UPS, announcing some really significant layoffs. In fact, these kinds of cuts led to a 58% increase in U.S. job cuts last year. So yeah, people have a very good reason to be feeling insecure right now. All right, on to clue number 3. Let's zoom out a bit and look at the global ripples, because this is where the mystery really deepens. We need to see how the U.S. economy is playing with the rest of the world, and we'll start with its currency. So here's the deal. The U.S. dollar has slumped to its lowest point in 4 years compared to other currencies around the world. What does that mean for you? Well, in simple terms, its purchasing power is shrinking. Every single dollar you have buys less stuff on the world stage than it used to. And then you have this. At the exact same time the data is showing the dollar hitting a 4-year low, you get this official statement from President Donald Trump saying, quote, "The dollar's doing great." I mean, this kind of direct contradiction between the hard numbers and what we're being told, it just adds a whole other layer of confusion to the mix, right? Now, this next part is weird. It's a genuine historical anomaly. See, gold has always been the classic safe haven asset. It's what investors buy when they get scared. And if you look back at history in the 70s, in the 2000s, when gold surged, the stock market crashed. It's like a seesaw. But today, something completely different is happening. Gold is soaring, but stocks are also at all-time highs. It's like the market's fear and greed gauges are both maxed out at the same time. This has basically never happened before. Okay, that brings us to our final clue, and it lies with the one institution that has to try and navigate this whole bizarre environment without crashing the whole system, the Federal Reserve. And what do we find? A huge disconnect. The Fed is basically telling everyone, hey, slow down, we're being cautious. Expect maybe only one interest rate cut this year. But the market is not buying it. Not at all. Investors are placing massive bets that the Fed will be forced to cut rates twice. This sets up it's a high-stakes standoff. And somebody is going to be proven very, very wrong. So let's recap. We've looked at all the clues. The soaring market, the terrified consumer, a weak dollar, this weird gold thing, and now the Fed's big gamble. So what's the final verdict? What do we make of this Schrödinger's economy? Well, there's one financial theory that might give us a hint. It's called reversion to the mean. And the idea is actually pretty simple. Extremes don't last forever. Eventually, these two wildly different trends, stocks flying high while confidence is in the gutter, they have to snap back toward normal. That giant gap between them, it has to close one way or another. And that, of course, brings us to the ultimate question. Right now, just like that famous cat, our economy is in this weird, uncertain dual state. But you know what? Eventually, that box has to be opened. So, what happens then? Which reality is the real one? Is it the booming market or the anxious consumer? Which one is going to win out and define our future?